the gentleman from Wisconsin, Mr. Duffy, chairman of our Oversight and Investigation Subcommittee.
Madam Chair, welcome. Obviously, looking back to 2008, the crisis had a huge impact, not just on the financial service sector, but had a huge impact across our country and on many of the families that we represent. And I would argue that this massive Dodd-Frank bill was passed in a time of fear, where people were concerned about the future of our country and the future of their family. And a 2,300-page bill was passed before the dust had even settled, and we had a full analysis on what caused the crisis. And we were told by our friends across the aisle, who I would argue opened up their cabinets, their file cabinets, and dumped in every wish bag issue that they had for probably a decade. But they made a promise to the American people that when they passed that bill, they would be ending too big to fail. Because people were concerned not just about the economy, but the fact that the taxpayer, their money was going to bail out large financial institutions. Do you agree now, almost a decade on, that we have ended too big to fail?
Well, I think we've taken very significant steps toward...
No. Madam Chair, that's not my question. We were promised that we would end too big to fail. I wasn't here. That they would end too big to fail. So I think the American people have a right to know what you think. Have we ended too big to fail? Yes or no?
So, as I said, I think too big to fail is a less significant problem now than it was before.
So you're saying it's still a problem? We haven't eradicated the threat, have we? Too big to fail still exists. Yes?
I think we've made very important and meaningful strides toward ending it.
Madam Chair, these are simple questions.
I'm sorry, I don't think it's a black or white thing,
so you can
yes
say yes
or no.
I can tell you, Congressman Duffy, we have ended too big to fail. America is better off for Dodd-Frank and the fact that I'm the chair of the Fed. Or, frankly, no, we haven't. We haven't ended too big to fail. We've made progress, but we haven't ended it.
We have done a great deal to make it possible for a systemic institution to be resolved successfully.
So I'm going to take that.
The odds of accomplishing that are much better.
I think what if I'm going to clear the smoke, you're saying we've made progress, but we haven't ended too big to fail. And I think you're in a safe zone because Elizabeth Warren even admits we haven't ended too big to fail. The ranking member and my friends across the aisle will admit clearly in hearings here, we haven't ended too big to fail. So my question for you is a 2,300-page bill giving you and other prudential regulators significant authority that has had a huge impact on the financial sector and on our economy. If we haven't ended too big to fail, is it a failure of Dodd-Frank or is it a failure of the Fed?
I'm sorry, I'm not willing to describe it as a failure because, number one...
Well, we haven't ended too big to fail.
I'm sorry, no, we have made great progress in trying to achieve that, and it is not a black or white issue.
Does that answer work for my constituents? When I go home and said, this was a devastating crisis, it had a huge impact on your family, we're 10 years on, we had a 2,300-page bill, you can't get a loan from your credit union or your community bank, I'm not done, or from your community bank, and Chair Yellen came in and she said, we've made progress.
So we have a system that is much safer and sounder. It is much more resilient. It has much more capital, much more liquidity, and better, although certainly not perfect,
I full-heartedly disagree on many issues with Elizabeth Warren, but at least she's truthful on that one. Larry Summers recently, I'm sure you read his piece, said that to our surprise, capital information is at least superficially inconsistent with the view that banks are far safer today than they were before the crisis, and some support for the notion that risks have actually increased. Larry Summers, do you disagree with Mr. Summers as well?
I do. I disagree significantly with that conclusion because it is based on the notion that markets properly evaluated the risks in banking organizations before the crisis, and nothing could be further from the truth.
I'm going to give you one quote. In 1788, James Madison worried that laws may become so voluminous that they cannot be read, or so incoherent that they cannot be understood. 2,300 pages in Dodd-Frank, 30,000 new regulatory restrictions, a 900-page Volcker rule, 600 pages of Basel III, and you can't tell me with all that rule and regulation that you haven't eradicated the threat of too big to fail.
Time of the gentleman has expired. The chair now recognizes